This segment is sponsored by the Equity Management Academy. On this segment, what I would like to do is simply review the process that our new subscribers basically follow through in order to obtain their information every day, every week, which basically covers all our reports that we publish. So if you go to the members area, what you will see basically once you enter into the members area is that on the right we have about 5 reports. You can select your subscription and you click on the daily, let's say futures, stocks and ETFs prices, the algorithms, the daily algorithms, and this gives you the information basically that we're going to use the following trading day. So in essence, I prepare you basically to get this information by 7 o'clock Pacific time for the next trading session. This algorithm covers the electronic markets 23 hours a day. And what we teach you here in the room is how you can identify the signals that are produced based on when you start to trade. Since the algorithm can be utilized and can be deployed and executed in the Globex or electronic markets, it can be used by foreign investors that are in a different time frame than the United States. So it provides you with a daily guideline in algorithms that you can execute on a daily basis. And when the US opens, then we basically put these algorithms in place, and we use them to day trade the market and identify for us high probability day trading opportunities. If you look at the index, we have another report that is called the Futures Gold and Silver Weekly Report. This report is published every Saturday, and it gives you the weekly algorithms, what to expect for the following week, what you should be looking for, and when is the market changing its direction. It tells us pretty much the numbers that we need to look, or the levels or codes that we need to watch. And what I would like to do is simply take a look and examine with you what the market has done since we published the report last Saturday. And if we take a look at the weekly report in gold, I give you a summary, and I give you the numbers, obviously, where to exit, where to enter, and you know how to feel for the trend direction. And specifically, I describe the components that I use to identify such signals. And if I can just read it to you, that in the gold market, basically on Friday, May 22nd, the contract closed at 12:05, and the market closing above the 9-day weekly moving average of 1198 is confirmation that the trend momentum, the weekly trend momentum, is still bullish. But it tells you right here, a close below would negate the weekly bullish short-term trend to neutral. So the market on Friday closed here, and it basically came in and broke the 1198 level. If we just take a look at the moving average and reverse basically this trend to neutral now. And if we take a look at the pivot for the week, it's 12.12. So the market closing below 12.12 on Friday told us that the price momentum was bearish, and it coming into this week. And that it also tells you if the market trades above 12.12, that would negate this bearishness that we identify coming into this week. And so coming into this week, it told you that look to take profits on any shorts into corrections at the buy 1 and buy 2 levels of 1193 to 1180. This is the weekly signals, and it's telling you obviously coming in that because we closed below the pivot of 12.12 that the targets were the 1193 to 1180. And let's take a look. As we came in on Monday, the market was pretty flat. On Tuesday it was. This is actually the 25th, which was a holiday in the U.S. And then on Tuesday, when we came in, they broke the market obviously all the way down to making a low of 1184.80, stabbing into this level of support, activating a weekly buy at 1193. Okay, and so the signal is picked up the first buy signal on the weekly at 1193, and it's using 1193 on a stop, or if you want to give yourself a little more room, you're looking at about 1180. The pocket of basically accumulation, or the blue zone, is 1193 to 1180 on the weekly. You're looking at the daily algorithms to be 1180 to 1171. I think that's what you call harmonic timing is taking place right now in these markets. And so we're looking for additional confirmation, basically, that essentially would validate this, and that would be a close of above 1193, or a test of 1180 and market closing above 1180 after testing 1180. And that would be pretty much, I think, the lowest level or the highest probability level that you may want to enter into a long position. What we have here in the gold market, these lines that you see here are the Fibonacci trend lines that we use to identify levels of support and levels of resistance. And you can see here that the resistance that we met last week came in as expected in that 1232 area. That seems to indicate by the red zone, or where the supply came in, or where the resistance was identified. And closing obviously below this zone here, it triggered this sell-off that is giving us the opportunity now to look on the long side as the market harmonically is joining together the weekly algorithms around these levels for the gold market. So once again, to just reiterate the signal in gold, we have approached harmonic timing here in gold on the weekly indicators as well as the daily indicators, which is giving us a high probability that we are experiencing some kind of a bottom. In terms of the gold, buy a close 1194, which will confirm the weekly signal, the weekly swing signal, as well as the daily, as you can see here at 1194. So it's a very strong indicator. Or if the 1180 is tested below and closes above the 1180, would be another confirmation. So right now, we're waiting for a signal here to develop in gold, and very patiently are watching it. The silver market, the July silver on May 22nd closed at 1710. With the market closing above the 9-day moving average of 1651, is confirmation that the weekly trend momentum is still bullish. But it also tells you that a close below 1651 would basically negate this bullish short-term trend to neutral. We have the market trading at 1668. The low today was about 1658, and so we seem to be coming right into this weekly moving average of 1651, and we want to pay attention to that. We would like to see the price reject that or come down, cross that, and close above it as confirmation that the trend has resumed its uptrend. But it does give you a level of caution, so to speak, if the market violates this price. In the meantime, the pivot point of the metrics for the week is telling us that the market closing below the VC weekly price momentum indicator of 1725 confirms that the price momentum was a little bearish coming into this week. And it also tells you what to expect above to negate this trigger point, which is the 1725 above. If you went short, it tells you that you want to take profits on shorts on any corrections at the buy one level of 1672 to 1634 on the weekly basis. And I think we're looking at a low so far of 1658, which is stabbing into this once again weekly support area of buy one and buy two, activating a weekly swing signal at 1672, which is the signal that we have activated and we have open, and we're using that 1671 as our stop for the time being on the weekly swing trading signal. And we'll look to enter it if it does come down to 1634, but from 34 to 72, it's a lot of risk. So if it does close below us and stop us out, fine. If it keeps us in, then we'll use that 16,772 as a stop for the time being. On bigger positions, if it does come down to 1634, then you can use that 1634 as a bigger risk stop level. As of right now, it's a little bit too rich for us, so we want to manage the risk, which you can as well, on the close of the first level of B1. Not necessarily indicating that it's going to come down to 1634, but be prepared to buy back your long side on a close about 1672. And basically, this confirms once again the tremendous harmonic timing synergy that we have between the daily algorithms, which you see on the chart on the right here, of 1654 to 1630, and the low being 1658 today. So this is what I call harmonic timing, and when I see this kind of relationships, it's usually a very high probability that these levels here are going to support incomplete, confirming that these are major levels of support and buying opportunities accordingly. I hope this gave you some idea in terms of how we're using this algorithms daily and how we're applying it for swing trades as well, in such that you can not only manage this application in the futures markets for day trading, but you can also manage it for swing trading, and not only futures, but also ETFs such as JNUG, Nugget, which are basically gold mining shares that we are using to manage the risk away from our futures position. If we decide that we want to maintain a position overnight, then we transfer the risk to an ETF. And as you can see here, this was a day trade we did today. They do offer tremendous volatility. Be prepared to experience tremendous volatility, as the ETFs are inverse XXX velocity ETFs. So they're going to move more than you ever experienced in a share, and you got to be prepared to handle that kind of volatility. If you have any questions at all, please feel free to contact me directly. You can reach me at 805 area code 418-1744, or you can email me directly at support@ema2trade.com. That is support@ema with the number 2trade.com. The U.S. toll-free number is 877-733-1511. Once again, my friends, this is Patrick MontesDeOca. I want to thank you once again for the opportunity to share this tremendous trading intelligence tool that we have been able to use in the process of building this tremendous performance record. Until next time, my friends, have a great week. Take care. I'll see you then.